Fortune favors the bold. And as you know, fortunes also are made in a bear market. Now, the quote that's in the title today is from Alexis Ohanian and his team at Reddit, who are raising yet another multi-million-dollar fund to buy a whole lot of coins, making the argument that everything is on sale and now is the time to get long. I'm going to be discussing that and all the news. But of course, I have a guest today, Hirander Misra, who is the CEO of GMEX, which is a company that's building infrastructure for institutional trading. And we're going to talk about the situation on the ground right now with institutions, how they're viewing the bear market, what kind of tools need to be built for them to actually engage with crypto. You guys don't want to miss this. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and hit the like button. There's even a thing down there that we've never used before that apparently is scrolling on the bottom that tells you to hit the like button. So we're going to basically hypnotize you by making that go by over and over again until you guys do it. Now, I gave you a pretty thorough intro there as to what was going to happen today. I'm actually a bit short on time today, so we're going to get right into it. Without further ado, I'm going to bring on our guest today, Hirander Misra from GMEX Group. How are you today?
Hi, very well, Scott. How are you?
I'm doing great. So listen, as I touched on sort of in the introduction, we've had this evolution of institutional involvement, or at least our opinion of at what level it exists through crypto. Of course, in 2017 bull run, institutions are here, which obviously was not the case, largely because we were lacking the infrastructure for them to actually engage. That's what you guys, I believe, are building. Right. So I'm curious with DeFi, CeFi, TradFi, how do you basically combine all of these to make platforms and tools that actually allow institutions that are used to, operating on Wall Street, how they can trade this market or be involved?
Yeah, great question. I mean, we're seeing, despite the current bear market, we are seeing increasing institutional demand because it's not just in crypto, it's kind of crypto related products or structured products that are digital asset like. There's been recent announcements with Coinbase and BlackRock out there in the market, which some of your viewers may have seen. Equally, Invesco have announced a metaverse fund as well, which is very interesting. And so as these institutions get into this asset class, Coinbase is just one exchange. There are lots of digital asset exchanges out there. There's also traditional exchanges for things like futures and options products. The likes of CME in the US, for example, where these investors want exposure, they want to hedge exposure, they want to trade. So it ultimately means that actually current TradFi infrastructure, which is very centralized and has been around for decades, needs to interconnect with decentralized infrastructure. And in the middle of that, you've got some of these centralized digital asset exchanges like Coinbase that also need to be connected to as well. So it needs to be an amalgamation of that, and interoperability needs to exist between all of those.
And so how do you actually build that and make that work? I know that you've referred to it as hybrid finance or hi-fi in the past, which I love and I've heard around. What does that look like?
Yeah, so it means on the one hand, traditional finance is all about, APIs and connecting those to each other, whether it's, for trading, something called fixed protocol is well used. And for the crypto exchanges, use an API like REST API. So on the one hand, you've got to have those protocols and you've got to connect into those centralized systems in a way that they're accustomed to. Asset managers out there, there's huge demand out there, but they need to have valuations, risk management. It all needs to be in existing platforms. They can't afford to rebuild those or run things on a silo. On the other hand, a lot of these digital custodians that support assets are decentralized, or when these asset managers want to get into yield, there's a multitude of decentralized platforms they need to connect to. So by that premise, on the one hand, you've got to have APIs into traditional finance or TradFi. On the other hand, you've got to connect into multiple blockchains, whether they're private blockchains like Corda or public blockchains like the Bitcoin blockchain or Ethereum. So it's got to be a network of networks approach where no single blockchain kind of satisfies all. Everyone speaks about blockchain as one ubiquitous technology, but there are lots of them out there. And equally, there's lots of different offerings on the traditional finance side, and they've all got to interconnect.
And that's every time we try to And every time we could try to connect them, we seemingly get some sort of bridge or wormhole hack, right? So there's obviously some work to be done to make it efficient and safe. I would say you talked about, I heard you mention sort of the idea of custodians, which I think, as I mentioned before, like sort of on the trajectory and evolution of crypto and institutional involvement, that was the biggest hack that needed to happen, right? A safe and secure way for people to actually custody their assets, for risk managers to be able to, push it through the company. Well, now we have the biggest custodians in the world, the State Streets and such, coming into the crypto space. Does that mean that, is this one of those things where you cheer for institutional adoption, then you actually don't necessarily want what you asked for because it's going to eliminate the digital players and we're just going to become Wall Street?
Yeah, it's interesting. I mean, there is a middle ground. I'm not to sit on the fence because some of those kind of what I call neo offerings have kind of set the market and they've built some great traction. You've got the likes of BitGo out there, a number of other custodians, Anchorage as well, that are getting decent traction. Zodia by Standard Chartered. So the banks themselves have also created neo custodians. With that Standard Chartered example and Zodia that I mentioned. It's interesting. I mean, everyone expected the traditional custodian banks to fight back. The likes of Citi, State Street, Bank of New York Mellon have all made announcements over the last few months, over the last year or so, to come into this space because asset servicing is big business. And equally, a lot of institutions are accustomed to using these types of players for their existing activities. So it makes sense to consolidate them, but it doesn't mean there isn't a role for neo players as well. It's horses for courses. And I think competition is good in the market. But when we speak to a lot of buy-side clients, what they say is actually they want a multi-custody approach because each custodian has different capabilities. And when they connect to one, and they did so to create new products and opportunities, that was great. But when they need to connect to 4 or 5, this is where they need infrastructure that gets rid of that spaghetti and kind of streamlines it more.
Yeah, that makes perfect sense. And I guess then it's probably true that anyone who's digitally native, like the hedge funds that started with crypto, are going to be much more comfortable with the custodians that you kind of refer to as neo custodians. But probably when the BlackRocks and such come in, they'll be more, comfortable with the bigger name custodians. So there probably is room for both. But I think the question everyone wants the answer to probably, and that I always ask, we're here now in the depths of the bull market. You're building these tools for institutions. Do you think that they've been scared off at all? What do you see in the next 12 to 24 months? Are you still getting all the questions and, the interest in the market, or has that somewhat slowed with the market?
Yeah, I mean, this bear market is interesting because, having lived through the crypto winter in 2018, and there was a resurgence, but during that period, those questionable business models kind of fell by the wayside, right? But it gave a big opportunity to build and innovate. And we saw a lot of the benefits of that over the coming years, during the pandemic as well. The recent events have led to, some of the same things happening with some of those evolved business models, but that's presented an opportunity as well, because I think we can get down to real business now. A lot of the hype and a lot of those opportunities that seem good on the surface but weren't so good are falling by the wayside, but it means that we can get back to real activity, get through that hype cycle, and we're going to see a real period of innovation. And we're beginning to see, actually, ironically, more institutional demand rather than less. With those recent announcements that I mentioned, there's more and more interest for institutions to come in and for this asset class to have the infrastructure to support it. So actually, I would argue that there's going to be a golden period that emerges, irrespective of what happens in the near term.
So sort of the idea that, which we hear from every single project lead and CEO, is that the best things are built in the bear market because everybody can slow down and actually focus on the product rather than the price. But, everybody keeps pointing, sort of, you alluded to it as well, like BlackRock is here now. It's the depths of a bear market. See, institutions are still coming. But anyone who's coming into the market now, and we're seeing that news, was making these plans during the bull market. Right. So, so it's a little, I'm not saying from you, but the narrative is a bit disingenuous to say all of a sudden, now that we're in a bear market, all these huge institutions are showing up when we know that they have probably been looking at this for years.
It's a good point, Scott. I mean, it's a process, not an event. Rome wasn't built in a day and things will evolve. But that said, we're at the core face of this with what we do as an organization as well. And we're seeing an uptick in demand. I mean, since the downturn in March, we're actually seeing more institutions engage with us. And I'm not just saying this. There's a few reasons for that. On the one hand, as they look at this asset class and they look at the complexity of connecting to it and that whole TradFi and DeFi construct and some of the challenges around that we've discussed, they're realizing that they need to invest into some of the infrastructure, make it scalable, and they're still getting client demand. And that may not necessarily be, for Bitcoin per se or for Ethereum. Obviously, there's bull and bear markets in every asset class, but there's a huge opportunity in structured products. There's a huge opportunity in derivatives, and the volumes in those are increasing month on month, irrespective of the bear market. And that in itself presents great opportunities, I think.
I agree. Since I have you here, I'm going to share actually the story that I alluded to earlier, because Reddit co-founder, VC firm, that's Lexus Ohanian, of course, seeking $177.6 million to invest in crypto tokens. Now, usually we see these funds and they're traders or they're people looking to invest in VC. I just found this one interesting, that the fund dubbed Cryptos will target tokens that are available at a discount thanks to the crypto market downturn, which I would argue is literally everything, right? So it's a target coins. So that means throw a dart, right? But the quote here, which seems to be similar to what you're saying, this is the best time to buy if you're really long on the industry. It's on sale. Everything is on sale. Is that sort of the general sentiment that you're getting from these institutions that are coming now? We missed it. We didn't want to buy it at 69. Now we have a chance again to buy it at 19 or 20.
Yeah, I would argue, everything's always for sale, right? But with this level of price adjustment, with certain liquid crypto assets, from personal opinion and, not to offer advice, there's certainly an opportunity, but equally, like any investment, whether it's penny stocks or whether it's more liquid securities, you've got to pick and choose where you want to put your money, and certainly, there's certain opportunities that are better than others. And, even some of the large crypto exchanges have recently said, be wary of certain types of projects as well, even on some of those newer coins. So I think, an objective approach here, certainly lends itself to opportunity. We are seeing a number of funds announce themselves, even during this period. And of course, as you rightly say, some of that's been in process for a while, but actually, many of them are actively investing even now. And in Europe, actually, CB Insights have recently shown a report where the first 6 months has led to increased investment in this space, not less, which is very, very interesting.
Yeah, that aligns well with my thinking and what we're seeing. Well, Hirander, thank you so much for taking the time. I love what you guys are doing. Any last thoughts before I let you go?
I just think this is going to be a collaborative network of networks effects, and no single institution can provide anything and everything. So we look forward to collaborating with others, and it's great to be on the show, Scott.
Thank you. We'll have you back again soon. You're welcome anytime.
My pleasure.
So as he touched on there, and as we often touch on this show, there's endless money still pouring into the crypto space. I just showed you, obviously, the Reddit fund, but here's yet another one. We've got top execs from Genesis and Galaxy are raising a $500 million fund. Interesting, because these guys got pretty wrecked by Three Arrows Capital, so they're back to raising money. And it seems that sort of the actual core funds, some of their key players are leaving here. Michael Morrow, who I've had on the podcast, he was the CEO of Genesis, and he's apparently, I didn't even realize, has been shuffled out because obviously they had given a $2 billion plus loan to Three Arrows Capital. But now we've got sort of the all-stars from both of these funds coming together to raise a $500 million fund. We've got, look at this. Galaxy's digital co-head of investments, Michael Jordan. What a name. What a name. Then we've got his partner, Kobe Bryant, LeBron James, Bob Marley, and Biggie. No, but basically all the the powerhouses from these are leaving to form their own fund. We're seeing this all across the industry. Now, guys, listen, I don't pander in rumor and nonsense, but this was a story that I just have been following because, holy shit, I have no idea what's going on. As you guys may have seen, I wrote about it in the newsletter this morning, but it was titled Rumors, Rumors, and More Rumors, because I think it's important to mention this and just chalk it up as exactly that. But if you guys didn't see this, Crypto Leaks, nobody knows who Crypto Leaks is, basically leaked all these videos of a lawyer who... Kyle Roche's name, Roche Freedom is his fund, who apparently has a deal with AVAX, making the claim that in 2019, the two joined together basically to execute vendettas against any of AVAX's competitors, to manipulate the market, and to just really do dirty, dirty things. And they have videos of the guy completely wasted. He claims that he was at a dinner. They got him drunk. They asked him questions, and they edited together his responses to make it seem sinister. I've seen the responses. I don't think there's anything really here. But if you guys haven't followed this story and you're looking for a good crypto-based soap opera, here's your opportunity to check it out. But you did see that downside on AVAX, but then, of course, the coin bounced massively. Hey, guys, it wouldn't be Tuesday in August if we didn't have some USDT Tether FUD, right? This time, they're coming from the Wall Street Journal saying, once again, that their assets outweigh their liability. By the way, by just 191 million, when you're talking about, I don't know what the market cap is, 67.7 billion now is the market cap. So this is marginal. But once again, the same recycled FUD that never has any backing or clear proof saying that Tether could become insolvent if there was a bank run. Completely nonsense. If you guys look at it, 67 billion they're sitting on. They've never had an issue with people coming in for redemptions, even in the depths of the bear market when UST was failing and they had 7 billion, I believe, in 24 hours and were able to hum along and redeem. It's important to understand how this works, right? Because people love to point at Tether and say, oh, it's off peg. It's at 99 cents, 98 cents. The peg is never been dropped when it comes to the important part, which is redemptions. The price that Tether is trading at on an exchange is in a silo, right? So there may be a run on the bank on that exchange for their Tether, which may push the peg down there. But as long as institutions and anyone can go to Tether and redeem their coins $1 for $1, then there is no loss of the peg. Oh, Emmy's here. My wife is here. She hasn't been here in months. What's up, Emmy? She's probably in the other room. Hi. And let's keep going. Meta adds Ethereum, Polygon, Flow NFT cross-posting between Facebook and Instagram, and your angry 74-year-old uncle is super happy to share his ape, right? Listen, this is cool, something that we got excited about before, but the average user on Facebook is well over 40 years old and has at least 7 of their 9 available screws completely loose if they're using the platform on a daily basis. Nobody uses Facebook, but Meta continuing to double down on their legless avatars doing Zoom calls, which I think is their entire business model now. We get to run around on Facebook without legs and share wild conspiracy theories with our crazy high school friends. But yes, they are finally adding the ability to share your NFTs, which means that you can now go take that stupid project that you bought for 99 that's now down 99% and share that embarrassing investment with everybody on Instagram and Facebook. Now, listen, I'm hating on them, obviously. I think this is cool. It's a real sign of adoption that a company like Meta, Facebook, would want you to be able to share your NFTs in the Zuckerverse, which is a real sign of adoption. I just have my doubts because Twitter has the same thing. Coinbase had allowed the same thing. And frankly, nobody is using it. This is a pretty big story. Federal Reserve sets July 2023 date for FedNow Instant Settlement Service launch. This is kind of going under the radar, but this basically is going to allow individuals and businesses the ability to receive and send payments instantaneously, right? We know there's always a delay. You never get your money. There's all this sort of 1970s infrastructure in the Fed. Well, the Fed is finally trying to evolve. And a lot of the pundits are pointing to the fact that a lot of this actually has to do with Libra, rebranded DM, the Facebook stablecoin that was proposed and shot down in Congress, where basically the Fed and the government said, this is a really good idea, but a really bad idea to have a private company like Facebook. Now, you can argue the other side of that, honestly. But basically, Facebook said, hey, we got Libra and DM. We can make instantaneous payments. We basically can form our own currency and compete with the United States dollar. This is also the case for stablecoins. So listen, for an institution or someone who trusts the government and their banks, this is going to be a huge innovation. And this will actually be a legitimate competitor, I think, unfortunately, to stablecoins and the Libras of the world. So this is a story worth tracking. They're saying it's going to launch as soon as next year, April, May, definitely by July. And they're already testing it with 120 participants. But none of those are the biggest story of the day. None of those are the biggest story of the day. The biggest story of the day, and listen, this is maybe it's slightly below us to share this, but the biggest story of the day is Vitalik Buterin. It's a huge, massive story. Big, right? This is the photo that people are claiming is the reason that Ethereum has, we'll say, risen over the past few days, right? People are making all kinds of jokes, obvious jokes about things like hard forks and inflation and how Vitalik is clearly preparing for the merge. It's uncomfortable. But it's a crazy picture. Some people are also saying that Ethereum is going to go down because clearly the market is pointing down and to the right. You guys can make your jokes in the comments. This is your opportunity. But this, I mean, it's a crazy photo. I scientifically don't really understand what's going on, to be quite frank. But it's the only thing that's being talked about on all of Twitter because, I mean, packing heat. That's all I got. That's all I got, guys. I have an appointment today that I would love to see you guys' jokes over here. Going long. Is that fake? And I don't know. Going long? I don't know. Hard fork. See, that's right. These are the jokes. This is what we're here. Girthy things happening with ETH, the Coke can indicator. Yes, it's because he's very tall. That's correct. Yeah. I'm happy for him and maybe jealous. Market is bananas. I see Hirander in the background, and I'm sorry, man. We're not always, we try to keep it very professional here. He went 125x long. Yeah, he is definitely not trading on 1inch exchange. What's wrong with the photo? TW's like, that's just how all my pictures look, right? I thought the hard fork wasn't for another few weeks. I'm more bullish on ETH than ever. But the funny thing is, there's legitimate people being like, wow, this photo of Vitalik is really driving the market. And then I don't know if you guys saw the pictures of his dad, but Vitalik's father was like this massive beast of a bodybuilder guy, which just seems very surprising. Yeah, he has a large wallet pressing against resistance. Yeah. No, his fashion is great. It accentuates his most important parts. Anyways, guys, I have to go. Today, as I told you, is going to be a bit of a shorter stream. I'm taking him off the screen. I can't look at it. My wife's here. You can't show that for too long. Can't do that. It's just got weird. Hey, guys, tomorrow I will be back at 9:30 a.m. Eastern Standard Time with more very important news updates like drunken lawyers screaming conspiracy theories and Vitalik Buterin's massive endowment. That's all I got for you guys today. I hope that you have a good one. I will see you tomorrow. Peace.